Okay, let's unpack this. We're seeing a really remarkable counter-narrative emerging in the housing market, aren't we?
We really are. It genuinely seems to defy the headlines we see everywhere else.
Exactly. While so much of the national news points to cooling markets, even outright declines in places that saw those massive booms.
Places like Florida, Texas, Arizona.
Right,
Ugh.
those spots. But there's this unique and honestly quite astonishing story unfolding in a region that often flies under the radar.
hmm
We're talking about a place where home prices aren't just holding steady, they are actively booming.
Bidding wars are still common.
Still a common everyday sight. It's this truly unexpected surge, especially when you think about the broader economy, interest rates going up.
Mm,
It's surprising.
it definitely stands out.
So our mission with this deep dive is basically to cut through all that noise you might be hearing elsewhere.
It's straight to the point.
Yeah, and give you a crystal clear, concise understanding of this intriguing market phenomenon. We're going to reveal exactly where these surprising price increases are happening.
Dig into the reasons behind it.
Dig into the fascinating underlying reasons, and maybe most importantly, analyze whether this unexpected surge is actually, sustainable for the long haul.
Right. Can it last?
This deep dive, think of it as your shortcut to being incredibly well informed about the unexpected resilience and, well, robust growth in upstate New York's housing market.
I think that's good. Let's get into it.
So, to really get a handle on this anomaly, let's look at the current picture on the ground, shall we? It's truly an outlier in the national housing conversation.
Definitely.
We've all been just inundated with reports, seeing data about home values dropping in, well, numerous parts of the U.S.
You look at cities across Florida, big areas in Texas, Arizona.
Yeah.
The story's often about price corrections, right? More inventory, slowdowns.
Exactly that. But then you turn your attention to upstate New York, and it's like a completely different story. We're talking about continued robust appreciation. It's almost defying gravity market-wise.
The numbers really back that up, don't they? They're quite striking.
They really are, and they put these regions right at the very top, nationally. Take Syracuse, for instance. Home prices there grew a remarkable 7.7% just in the last year.
7.7%. In a year when many major metros were flat or even down. That's significant.
It's huge. To put that in perspective, Syracuse's performance wasn't just good, it made it the #2 highest growth market in all of America over the past 12 months.
#2 nationally. Wow.
Imagine that. And right behind it, you've got Rochester. Prices there grew by a substantial 6.5% over the same period.
Which puts it where? #5.
#5, highest growth market nationally. These aren't just like minor upticks or statistical blips.
No, these are serious gains, top-tier stuff.
Absolutely. Placing these cities squarely among the best performing housing markets in the entire country, and it's not just those two.
Right, you mentioned others were strong too.
Yeah, other areas showing significant strength too. Utica ranked #12 nationally. Binghamton came in at #20. It really speaks to a widespread, region-wide thing happening.
What's really compelling here is how those growth figures stand in such stark contrast to those other areas we always hear about, the Floridas and Texases.
Right.
It's a powerful testament to some unique regional dynamics at play.
Yeah.
And maybe we should clarify, when we talk about upstate New York for this deep dive, what area are we really focusing on?
Good point. It's important to define the scope. We're not just looking at one isolated city here.
No, it's broader than that.
We're discussing the entire corridor that stretches, let's say, from the northern suburbs of New York City, starting around Poughkeepsie in the Hudson Valley,
Okay.
then moves north through historic towns like Hudson, the state capital in Albany,
Right, Albany's key.
and continues all the way west through the major cities like Syracuse, Rochester, and finally reaching, Buffalo out west.
So that whole upstate to western New York corridor, a pretty diverse region.
Exactly. Diverse communities, charming small towns, bustling mid-sized cities, and they're all experiencing these unique, pretty compelling market dynamics.
Okay, that makes sense. A large area behaving similarly.
And when we dig into why this boom is happening with such force, the core reason becomes crystal clear pretty quickly.
Inventory.
It's an extreme and pervasive inventory shortage gripping this entire region. This isn't just a slight dip in available homes.
No, it sounds critical.
We're talking critically low housing inventory that is directly fueling these persistent price increases. And yes, those fierce bidding wars we're still seeing. It's a fundamental imbalance.
And it hasn't corrected itself yet.
Not at all. Let me give you some concrete data points to really illustrate how severe this is. In the Albany metro area, that's 5 counties, a big economic hub for the region,
Right.
The housing inventory is down a staggering 46% from its long-term norms.
46%? Wow.
Think about that. Before the pandemic, you'd typically find around 3,400 homes on the market in that five-county area.
Okay, a decent number.
Today, it's a startling 942 homes.
Wow, that's a huge drop.
Huge. And the long-term average for that region, going back decades, is actually around 2,000 homes.
So less than half of normal.
Less than half of what was considered healthy inventory. And what's really concerning, and keeps prices jacked up, is that there's been virtually no recovery in inventory over the last 3 years.
It's just stayed stuck at those low levels.
Just stubbornly low. It acts as this relentless pressure point on prices.
And is it like that elsewhere in the corridor, too?
It's a similar story, yeah, equally dire elsewhere. Poughkeepsie and Newburgh, down in the Mid-Hudson Valley, inventory is down approximately 60% from pre-pandemic levels.
60%. Imagine trying to buy a house there. The lack of choice.
It's incredibly scarce. Out west in Buffalo, the situation is equally constrained. Inventory there is down about half from where it was even during the pandemic.
And the pandemic market was already tight.
Exactly. So this isn't just abstract data. The shortage has very real, immediate consequences on the ground.
Right. It's driving prices up, fueling the competition.
It's directly causing prices to go up at a very healthy clip. And it's the primary, undeniable driver behind those continued fierce bidding wars that are still so common. Buyers are just desperate for options.
Makes sense. Basic supply and demand, but on steroids.
Here's where it gets really interesting, though, and where the data kind of comes to life. It's not just that prices are going up, it's how fast homes are moving, even now.
Still moving quickly.
Incredibly quickly. I spend my summers in upstate New York. I'm originally from the area, so I often, go look at open houses just to get a feel for the market pulse.
Yeah. What are you seeing?
And let me tell you, it's astonishing. When I visit these open houses, the house is typically listed for only 2 or 3 days before the open house event.
That fast.
That fast. You walk in and it's packed. A whole bunch of people crowded in, just like we saw at the absolute peak of the pandemic frenzy.
Wow, still like that.
The atmosphere is just palpable with urgency. Then, maybe 5 days later, that property is off Zillow, already pending sale.
5 days from open house to pending.
Yeah, this is very much the same kind of immediate, aggressive buying action we saw during the most intense pandemic periods. It's still happening right now, actively, in upstate New York.
That immediate buying plus the low inventory.
Exactly. That combination is precisely why we can confidently forecast that prices will probably continue to grow in upstate New York over the next year. It's that supply and demand dynamic playing out in real time.
That persistence of market heat, like you described, is crucial. And it leads us to understanding the dynamics behind the demand side a bit better.
Right. Why is demand still so strong?
It's not just that houses are scarce. It's why they're scarce and why demand remains so incredibly robust, even with, a challenging national economy.
Okay.
A significant trend, one that maybe gets overlooked sometimes, contributing to this sustained demand, is what we can call the return migration factor.
Return migration, people moving back.
Exactly. We're seeing a noticeable, continuous number of people who left upstate New York over the last, say, 5 to 10 years, now moving back to the area.
Interesting. So not just people from elsewhere, but people returning home.
It seems to be a measurable demographic shift. It adds this crucial layer of demand that maybe wasn't as strong in previous cycles.
Okay, so why are they coming back? What are the drivers there?
Well, it's probably multifaceted, but we can infer some powerful drivers from broader trends. Primarily affordability. It's a huge factor.
Compared to the big cities, you mean?
Absolutely.
Yeah.
Especially when you compare upstate New York to the skyrocketing costs in major coastal cities like New York City, Boston, even parts of Jersey or Connecticut.
Right. You get way more house for your money.
You can buy a much larger home, more land, often at a fraction of the cost, and still be within a reasonable driving distance to those major hubs if needed.
Makes sense. What else?
Beyond just cost, there seems to be a strong desire for a different pace of life. Maybe slower.
Yeah, less traffic, more green space.
Exactly. A stronger sense of community, easier access to outdoors. That appeals to people looking to escape the urban grind, maybe aiming for a better quality of life overall.
And remote work must play a role too, right?
Oh, absolutely. The widespread adoption of remote work has been a total game changer. It's undoubtedly played a significant role.
Frees people up geographically.
It frees individuals and families from those strict geographic constraints. It lets them choose areas that offer a better lifestyle or just more space for their money without sacrificing their careers.
So that combination, affordability, lifestyle, remote work, is culling people back.
It seems to be a powerful mix, drawing people back to their roots or maybe to a region they now find increasingly appealing and accessible.
And this return migration factor, it becomes even more impactful, doesn't it? Almost like a perfect storm when you combine it with the supply side.
You mean the lack of building?
The severely stifled supply. To put it plainly, there is a critical structural lack of new construction in the region. It's not just a temporary pause.
No, it's historical, isn't it?
There's been a historical reluctance, or maybe just inherent difficulty, in building many new homes in upstate New York for decades.
So you got more people coming in.
You have this increasing wave of demand from people moving back, directly colliding with a perpetually limited supply of available housing.
It's not a temporary imbalance then.
No, it's deep-seated, structural. It creates this continuous upward pressure on prices. It's like a never-ending squeeze on the market, almost guaranteeing that supply deficit stays put.
What's truly fascinating here is how those two powerful factors, people returning and that historical reluctance to build, create this really unique and persistent supply-demand imbalance.
Yeah, it's not like other booms.
Exactly. This isn't a speculative boom fueled by rapid new development or lots of investors flipping houses. It's a market reacting to deeply ingrained supply limits, meeting a genuine resurgence of like organic fundamental demand.
And why is there such a lack of new building? Is it zoning, costs?
It's probably a mix of things. Complex local zoning regulations that restrict density, definitely. The high cost of materials and skilled labor is a factor everywhere, but maybe especially felt there. And often a slower pace of getting permits compared to faster growing areas.
So all those conspire to keep new housing starts low.
They really do, which just exacerbates the existing inventory problem.
Yeah.
And we can see the impact of this strong, sustained demand clearly in another key indicator.
Days on market.
Days on market, or DOM. It tells us how long homes are sitting before they sell. And while we have seen slight increases from the absolute peak pandemic speeds, which were just crazy fast,
Right, unprecedented.
homes are still selling remarkably quickly. It shows demand is still incredibly robust, urgent even.
Buyers are still acting fast, despite higher rates.
They have to, because the alternative might be getting no home at all. Let's look at some specific examples again. Rochester.
Okay.
The typical days on market for a house there is currently 27 days.
27 days. How does that compare?
Well, it is up from an incredibly fast 15 days last year, which was, an anomaly even for a hot market.
Right.
However, 27 days is still well below the pre-pandemic average for Rochester, which is usually around 30 to 35 days.
So still faster than normal, pre-pandemic normal.
Definitely. Homes selling in less than a month on average. That's undeniably brisk, shows strong buyer activity.
Okay, what about other areas? Hudson Valley?
Let's move over to the northern Hudson Valley. Say, the town of Hudson, which has become really popular.
Yeah, lots of people heading there from the city.
Before the pandemic, homes there sat on the market for an average of 110 days.
110 days.
A day. That number has dropped significantly to 78 days.
Wow, it's a big change.
It's a substantial reduction in market time. It signals a much more competitive environment. Buyers are acting with far greater urgency.
And even in smaller places, like the Finger Lakes.
Yeah, let's venture into some of the smaller cities near the Finger Lakes, like Auburn or Seneca Falls.
Yeah.
Seneca Falls, for instance. Beautiful village, popular second home spot, wineries, lakes.
Vacation destination, too.
In that very specific, desirable submarket, the days on market dropped dramatically from 68 days down to a rapid 28 days.
From 68 to 28, that's huge.
It really shows the surging desirability of these areas, not just for primary homes, but also for recreational properties. And just to underscore the point,
Bidding war is still happening there, too.
even in these more recreational second home markets, bidding wars are still happening, and prices are still going up, often substantially. So this collective data, right across the corridor, it just reinforces that demand remains persistent and robust, compelling buyers to act quickly.
So this brings us to the critical long-term outlook question, right?
Yeah.
Are we talking continued booms? Or does it eventually flatline? Or could there even be a crash?
Right, the crystal ball question.
For the near term, looking out maybe the next year or so, we can say with pretty high confidence, I think, that prices are expected to keep growing in upstate New York.
The current conditions strongly suggest that.
Yeah, the severe inventory shortage, the return migration, the fast pace of sales, it all points to sustained appreciation for the foreseeable future. The momentum is just clearly there. But here's the critical question that needs a deeper look. Beyond just the next year, what about the next 2, 3, maybe 4 years? Can upstate New York really keep outperforming the rest of the U.S. housing market indefinitely?
Or does its unique history suggest something else might happen?
Exactly. That's where things get much more nuanced and, frankly, quite intriguing.
This raises an important question.
Mm.
It maybe challenges conventional wisdom a bit. If we connect this to the bigger picture, the historical trends, we see this fascinating pattern. It suggests a truly unique trajectory for this market.
Unique how?
One that deviates significantly from what many expect based on those national narratives. Upstate New York's housing market exhibits this very consistent historical cyclical trend. It's distinct from more volatile, boom and bust markets.
Okay, so what's the pattern?
Instead of dramatic crashes, which you see in speculative hotspots, it tends to experience periods of intense price booms, usually lasting about 4 or 5 years.
Right.
Which are then consistently followed by a much longer period, often a decade or even more, where prices largely flatline.
Flatline, so they just stabilize.
They stabilize. They show minimal or very slow growth rather than declining sharply like in a crash.
Interesting. Do we have examples of that?
Let's look at Syracuse.
Yeah.
It's a prime example because we have this exceptional data set, 45 years of home price data for Syracuse, going all the way back to 1977.
Wow, 45 years. That's a long view.
It lets us clearly see these patterns. What you notice are distinct boom periods, followed by these extended periods of stabilization.
Okay, walk me through it.
The first notable boom happened from about 1981 to roughly 1987. Strong, healthy appreciation.
Got it.
Then, from around 1989 all the way through 1999, a full decade, prices in Syracuse stayed remarkably flat. It essentially moved sideways. Very little net gain.
A whole decade of flat prices after a boom.
Exactly. Then, another significant boom period started around 2001, continued through about 2007.
Okay, second boom.
And as history repeated itself with remarkable consistency, prices then largely stayed flat for the entire next decade after 2007.
Another decade of flatlining.
Right. So what we're in right now, starting aggressively around 2019, 2020, and continuing, is yet another strong boom period.
So the implication, if history holds.
The implication, if history repeats itself, is that at some point, prices in Syracuse are likely going to flatline again. They'll stop growing rapidly.
So maybe not a crash, but an end to the boom.
Precisely. And this isn't just like a historical quirk. It probably reflects the unique economic bedrock of upstate New York.
How so?
Unlike boom and bust markets fueled by rapid speculation or huge population surges, Upstate's growth is often tied to more stable, slower-moving sectors. Think government jobs, big universities, healthcare systems.
Right, steady employers.
They provide a solid, but not explosive, economic foundation. This seems to create a more predictable, maybe less explosive growth ceiling once a demand surge, like this current return migration, has been absorbed.
So for someone buying now, hoping for another decade of big gains?
Well, if you're buying into upstate New York expecting significant, sustained, double-digit appreciation over the next decade, the historical data suggests you might not see much more than you're seeing now or have already seen in this recent boom.
Okay.
We might see continued growth for the next year or so, sure, because inventory is still so incredibly low. But at some point, this market seems likely to transition into a period of stability rather than perpetual rapid growth.
That pattern is absolutely fascinating. And you said it wasn't just Syracuse.
No, not isolated to Syracuse, which makes it even more compelling. We see a remarkably similar cyclical trend when we look at Albany's home prices. Data there goes back to 1979.
Okay, Albany too.
Albany had a parallel boom, 1983 to 1988. Then, a decade where prices flatlined. Another boom in the mid-2000s, followed by another decade of stabilization. And now we're in another boom cycle there too.
So it really underscores this isn't just a one-city quirk. It's a defining characteristic of the broader upstate market.
It really seems to be. It truly sets it apart.
And this leads us to maybe the most significant differentiator for this region you mentioned, the no-crash phenomenon.
Yes, that's critical.
Unlike places like Florida or Arizona, which are famous for speculative bubbles bursting and prices crashing dramatically.
Right, wiping out equity.
Upstate New York has, incredibly, never had a crash in the last 50 years of data we have.
Never a crash in 50 years. That's a truly unique point.
The market here consistently goes through these defined boom periods, but then instead of crashing,
Prices just tend to remain stable. They flatline, maybe keep pace with inflation, but they don't decline sharply.
that unique characteristic offers a very different kind of stability, doesn't it? Distinguishes it sharply from more volatile regions.
It really does. It suggests that while rapid appreciation might not be forever, significant downside risk has historically been notably absent. For a risk-averse homeowner, or maybe a long-term investor, that stability is incredibly appealing.
Okay, that makes a lot of sense. A different kind of market profile.
Indeed, this historical stability is a defining feature, a sort of built-in resilience that's quite rare. Now, maybe let's shift focus a bit to the properties themselves. What can you expect if you're actually looking at homes there?
Yeah, good idea. What are the houses like? And are there any specific areas that seem, maybe a bit overheated now?
Right, overvaluation hotspots. Well, when we talk about the characteristics of homes in upstate New York, it's important to understand many are significantly older.
Older housing stock.
Yeah, we're often talking homes built 60, 70, sometimes well over 100 years ago.
So lots of character, maybe some quirks.
Exactly. Historical charm often comes with traditional layouts, certain architectural styles, beautiful Victorians, craftsmen's, colonials are common.
Right.
Solid wood frames, original details.
Okay.
But a very common characteristic of these older homes is that they often feature only one bathroom, or maybe one and a small half bath.
Just one bathroom, even in family-sized homes.
Very common. To give you a tangible example, a typical 3-bedroom, 1-bath house near Albany, say in Latham, listed for $349,000 recently. That one-bathroom setup is incredibly common.
Why is that? Just the era they were built.
Largely, yes. Built often in the 1960s or earlier, when single bathrooms were the norm for families. And those bathrooms, as you can imagine, often aren't huge by today's standards either.
Right. So buyers might need to factor in renovation costs.
Potentially. While these older homes have character and often good lot sizes, they can also present challenges: older electrical, plumbing, less open floor plans, maybe lower energy efficiency. It creates a strong renovation market, definitely. People want to update these solid historic structures. It's part of the upstate market's fabric.
It really paints a vivid picture, doesn't it? And speaking of unique, you mentioned potential hotspots. Is there an area standing out right now as particularly booming, maybe even overheated?
Yes, one area in particular really stands out: Saratoga.
Saratoga Springs, near the track.
Exactly.
Yeah.
Especially the areas near the Saratoga racecourse and the vibrant downtown. It has just taken off with astonishing speed.
Prices are high there.
You'll find many listings near downtown Saratoga in the millions of dollars, prices that would have been, frankly, unimaginable a decade ago.
Wow. Millions.
And to give you an idea of the rapid, almost dizzying price escalation,
Mm.
consider this specific situation. There are condos in downtown Saratoga currently priced at $789,000.
A pricey condo.
And what's astonishing and quite telling is that a similar property in that same area sold for just $55,000 as recently as 2021.
$55,000 to almost $800,000 now.
The current listing price is clearly trying to capitalize on that recent surge, aiming for an astronomical profit. It's aggressive.
So if you had to pinpoint one area in upstate New York that looks most like a localized bubble?
It would probably be Saratoga. It really appears to be pricing itself like it's, I don't know, Westchester County or parts of Long Island.
But it's not quite the same market fundamentals.
Fundamentally, it's definitely not. And you can actually see this reflected in the overvaluation data. Home values in Saratoga Springs specifically are currently 15.67% overvalued compared to their long-term norms.
Okay, over 15% overvalued.
And if you look at Saratoga County overall, including surrounding areas, the figure is even higher, 16.7% overvalued.
That's significant overvaluation. Is that creeping into other areas too?
That Saratoga overvaluation is certainly notable, yeah. And it warrants a close look because it does deviate a bit from the broader pattern. And yes, it's true, we are seeing some level of overvaluation now creeping into other upstate counties as well.
More recently.
Yeah, generally not to Saratoga's degree, but it's happening. Just 3 years ago, most of these markets weren't nearly as overvalued, maybe only 5% to 10% above their long-term norms.
Okay.
But now, prices have pushed higher. For example, Monroe County, where Rochester is, that's showing about a 28% overvaluation now.
28% in Rochester, Monroe County. Okay, so how do we measure overvalued? What does that mean exactly?
Good question. We look at various metrics, often comparing current prices to historical income to price ratios, or what fundamental economic models suggest the value should be based on things like local wages, population growth, economic factors.
So it's how much prices have stretched beyond those traditional benchmarks.
Exactly. However, and this is crucial, despite these rising overvaluation figures, we need to reiterate why we don't necessarily anticipate a widespread crash in upstate New York, even in these areas showing overvaluation.
Okay, why not? If it's overvalued.
Unlike markets like Florida or Arizona, where overvaluation often goes hand in hand with rapid new construction and heavy speculative investor activity, things that can lead to swift corrections.
Right.
The underlying dynamics here are fundamentally different. There are these built-in safeguards, it seems.
Okay, what are those safeguards?
Firstly, still critically low inventory. We've talked about this a lot, but it continues to be the dominant factor. The sheer lack of homes creates a structural floor for prices. It's very hard for prices to fall significantly when demand consistently outstrips supply.
Makes sense. Low supply supports prices.
Secondly, almost no new home building. Critical point. Unlike areas that build like crazy during booms, leading to oversupply when demand cools, upstate New York's supply side stays perpetually constrained. New supply isn't flooding the market to relieve pressure.
Okay, no flood of new homes coming.
Thirdly, very little investor activity. Key differentiator. Speculation often fuels those rapid run-ups and subsequent dramatic bursts in bubble markets. The absence of that speculative fervor makes for a more stable, less volatile market, driven more by fundamental homeowner needs.
Less speculation, less volatility. Got it.
Fourth, the local economies. They're remarkably stable, resilient. You have a decent amount of government jobs, state, local, federal, which are generally robust. Major universities, robust healthcare systems.
Steady eddies.
Exactly. They provide consistent employment, a steady economic base. It acts as a crucial buffer against sharp downturns.
Okay, stable job base.
Yeah. And finally, looking ahead, this area might even benefit significantly from future onshoring trends.
Bringing manufacturing back to the U.S.?
Yeah. As companies rethink global supply chains, look to bring production back, upstate New York is actually incredibly well positioned to attract some of that. Existing industrial infrastructure, skilled workforce, relatively lower costs compared to the coasts.
So that could be a future tailwind.
It could provide additional long-term economic tailwinds, further solidifying the housing market. So yes, while specific spots like Saratoga look overheated or highly valued, the broader upstate market, despite some creeping overvaluation, seems to have these fundamental safeguards against a big crash. Suggests stability, maybe flatlining, rather than decline.
Okay, that's a really comprehensive picture. So let's tie it all together. What does this all mean for you, the listener, if you're looking to buy, sell, or just understand this unique market?
What's the takeaway?
Overall, I think we remain quite bullish on the upstate New York market, broadly speaking. That powerful combination, high demand, critically low supply, stable economics achieving, it creates a compelling environment for continued price stability and at least near-term growth.
It's just a fundamentally different beast compared to many national headlines.
Totally different. However, and this is really crucial advice for any potential home buyer or investor listening, you absolutely must do your research at the most granular level, the specific city, even the specific zip code level within upstate New York.
Can't just paint with a broad brush.
No way! While we've given you this broad overview of regional trends, there are still significant differences from one micro-market to another, sometimes just a few miles apart.
A neighborhood nearby could be totally different.
Could have a very different price trajectory, inventory situation, demand profile. It is absolutely essential that you understand the price projection for your specific area over the next 12 months before making any big decisions.
Buying or selling.
Buying or selling, don't just rely on general regional trends or the national news you hear. Drill down, get specific.
That granular research, understanding the local nuances, that's key.
That's what will truly empower you to make the most informed, strategic choices in this unique and, well, dynamic environment.
Okay, so to quickly recap our deep dive today, we've looked at upstate New York's surprising housing boom. It's really a counter-narrative to national trends.
Driven by that inventory shortage and return migration.
Exactly. Driven primarily by severe, persistent inventory shortages and significant return migration, partly enabled by remote work. We've also highlighted its distinct historical pattern.
Booms followed by flatlining, not crashing.
Right. Consistent booms followed by long periods, often a decade, of flatlining prices. Crucially, not crashing. This fundamentally sets it apart, offers a unique stability.
And we touched on the older homes, the Saratoga hotspot.
Yep. Touched on the characteristics of its older housing stock, identified localized nuances like potential overvaluation in hotspots like Saratoga, but reinforced why a broader crash isn't expected. Stable economies, lack of new building, minimal speculation are key reasons.
Makes sense.
And if we connect this to the bigger picture, it's really a testament to how profoundly local market dynamics can defy national trends. It makes it essential to look beyond the headlines, dive into specific regional data, even down to the zip code.
It shows unique pockets can exist, behaving totally differently.
Exactly, based on their own foundational economics and historical patterns.
Okay, so this leaves us with a really provocative thought, I think, for you to consider as you process all this.
Hmm.
Given upstate New York's unique historical pattern, never crashing, consistently flatlining after booms, could this region represent a truly unparalleled opportunity for stability in an otherwise volatile national housing market?
Is it the ultimate safe bet?
Is it? A place where you might not get explosive growth long term, but where your equity is historically protected from those sharp declines we see elsewhere,
Or
or
has something fundamentally changed?
or has the recent surge in desirability and demand driven by these newer factors like widespread remote work, the significant return migration, has that fundamentally changed its long-term trajectory?
Could it break from that historical cycle?
Could this new wave potentially break from its historical cycle and offer unexpected, sustained long-term growth that it hasn't seen before, maybe elevating it to new heights?
That's the balance,
Yeah.
safe bet versus new potential.
Exactly. What's the true balance here between that historically safe bet and the potential for an entirely new chapter of sustained appreciation? It's something truly worth mulling over.